Corporate Financing Week September 2017 Australia finance with headwinds blowing, and with potential issuers and investors seemingly ready to wait until conditions are more favourable once more, the Australian IPO market looks set to finish 2017 with a disappointing tally of deals. Indeed, with local equities underwhelming in the face of the country's elevated housing market, and weakened commodity prices due to slowing Chinese growth, first-time share sales down under are on course to record the lowest tally of deals in 4 years. Way below former highs. YTD announced Australian IPO activity by deal value, USDMN source Bloomberg. Where have all the deals gone? According to data from Zephyr, a Bureau van Dijk product, there have been just 68 floats announced on the Australian Stock Exchange so far in 2017, worth a combined $2,208 Minnesota. This represents a sharp drop-off in deals from the $3,668 Minnesota via 57 deals in activity recorded by the same stage in 2016, and even further down from the post-financial crisis high of $14,790 Minnesota in deals via 72 floats recorded across the YTD period in 2015. Furthermore, with just over 3 months of the year left to run, we are not expecting activity levels to pick up before we hit 2018 either. In the current climate, the full-year post-crisis high of $16,944 Minnesota being raised across 111 new listings in 2015 seems a long way off. And the pre-crisis high of $19,517 Minnesota raised through 255 IPO deals in 2007, even further still, Zephyr data show. Within the depleted tally of deals to be launched in the 2017 YTD period, we highlight that there has been a noticeable absence of larger-scale transactions. In fact, we highlight that just 2 floats valued at over $250 Minnesota having been announced to date in 2017. The largest deal of those launched has been MCP Master Income Trust's proposed floats of 99.999% of its stock on the local Australian Securities Exchange. The float, which was only announced during the last week of July, and which is still pending as of the time of writing, is expected to see the firm raise $396.94 Minnesota from equity capital market ECM investors, with a final listing expected in early October. The only other deal to rank over the $250,000 mark, meanwhile, was Material Recycling Services holding company Bingo Industries $331.38 Minnesota float of the majority of the company 66.971% back in May 2017. Local equities are struggling. It is hardly surprising that there have been so few first-time share sales launched in Australia this year, and that the deals have been smaller in size on a historical basis, given that local equities have been struggling to find any momentum. Indeed, the benchmark SP/ASX 200 has underwhelmed in the 2017 YTD period and has gained just 0.12% since 2016 according to data correct to September 10, a trend which has brought about the sharp slowdown in IPO activity that we had been expecting CBMI Australian ECM activity to continue dragging feet in H216, August 17, 2016. We highlight that the benchmark has, however, maintained the ground it gained during H216, with the index still up by 12.67% from where it stood a year previously. Looking ahead, we believe that there is upside potential for local equities to enjoy a boost over the coming months and quarters, supported by a stabilizing economic backdrop and with commodity prices, which have endured a tough period over the past few quarters, starting to trend higher once more. However, with the overvalued local housing market weighing on the Australian banking sector and investor sentiment in more broadly, BMI believes that any uptick in local equity prices, and subsequently the volume of new floats appearing on the local ASX bourse, is likely to be sluggish rather than rapid. Cause for optimism. The macroeconomic backdrop certainly provides some cause for optimism, however. Australia's real GDP growth rebounded to 3.3% QoQ on a seasonally adjusted annualized basis in Q217, up from 1.3% QoQ in Q117 as transitory factors such as poor weather improved. Furthermore, leading indicators are showing strength primarily due to support from the government's infrastructure investment, and secondarily due to a turnaround in commodity prices. As such, we expect the economy to remain on a cyclical upswing, forecasting real GDP growth to come in at 2.1% in 2017. Looking beyond the year, however, BMI's Australia analyst has recently downgraded our 2018 forecast to 1.8% from 2.2% previously, as we see risks of a bigger downturn in the already elevated housing market. Beyond economic growth, another collateral effect of overvalued housing market is that we expect a cooling market to weigh on credit growth and the profitability of the country's banks. This means that banking equities are likely to underperform. The SP/ASX Banks Index has underperformed the broader index since the start of 2017 as efforts to meet increased capital requirements through either equity raising or in dividend cuts dilute existing shareholders, and given that Australia's banks make up a significant share of the local equities market, this is bad news for stocks more broadly. A thinning pipeline. The spike in listings witnessed in Australia over recent years has seen the bourse elevate itself to being recognised as a bona fide IPO listing destination on the global stage. In our view, this is not something that disappears overnight. Rather, we highlight that the bourse's disappointing activity levels are a blip, rather than a permanent medium to long-term turnaround in fortunes. After all, the ASX has the ability to attract foreign listings from the APAC region and beyond, as it has shown over recent years. That said, the immediate outlook for deals is looking bleak, with the pipeline for new floats looking especially thin after a number of high-profile deals have been pulled across the course of 2017 to date. Indeed, all of the following firms have either pulled their proposed floats altogether, or have shelved them for a later date, when the equity market backdrop may appear more favorable. Private equity-backed fast food firm Craveable Brands potential $400 Minnesota float. Office supply company Officeworks $1.5 billion deal. Hospitality and leisure group Dixon Hospitality's proposed $186 Minnesota deal, and fresh produce distributor Nutranos planned $45 Minnesota float. With the aforementioned deals having all failed to complete in the 2017 YTD period, we highlight Lattice Energy, the oil and gas arm of local electricity and gas giant Origin Energy, proposed listing. The listing could see the firm tap local equity investors for as much as $1 billion in what would, by some distance, rank as the largest deal on the ASX in the 2017 YTD and provide the necessary boost that the local bourse has been missing since the first half of 2016, when the current slump in activity first began. We caution that the potential float is far from a done deal, however, with the unit's parent also examining the potential of selling of Lattice via a trade sale, rather than a float.